they are placing long positions, right? So they are placing long positions. So even if we do have to, let's say we buying, right? So even if we are buying, our perspective of what needs to occur should never shift, right? Because on a lower time frame, there will be an opportunity for long positions to present themselves. But even though we do understand that there might be an opportunity for us to consider taking long positions, we must always remember that the long positions will be short-lived, right? We must always remember that these are short-term positions that we will be taking, right? So right now, at this current level here, we have seen the multiple spikes to the downside, right? So multiple spikes to the downside, basically its main objective is to activate and deactivate traders, right? If they have pending orders, what occurs is that they will activate them into positions, right, whereby their orders are filled. So upon filling their orders, what they will then do is that push price to the upside, then fill their stop losses. Those that have taken short positions will be stopped out when the market starts retracing, right? And those that have taken long positions at this particular area, by price pushing to the downside, what will occur is that they will be forced to liquidate their open positions, or they will be stopped out, right? Are we okay? Now let's move on to a weekly time frame. So now when we move to a weekly time frame, what we are seeing right now is that we are seeing the market moving in a bit of a consolidative state, right? So if we do have to look at this in the form of a, right? If we do have to look at this in the form of a consolidative state, and then we try to define the things that are included within a consolidation, right? So we will therefore say that the market has been making a bit of an excess price, right? So, but right now, because we have viewed it from a monthly time frame, and we have seen that this has the likelihood of causing a continuation. So remember that when the market is still in a bit of a consolidative state, what it does is that it provides some sort of confident to traders, especially when it's moving between a support and a resistant level, right? So it gives traders peace of mind, because a consolidative state or a consolidating market, what it does is that it provides assurance to traders, and then it does not accelerate their decision-making process, because the market is moving not so aggressively. Do you guys understand what I mean? So if you are in a market that is not moving aggressively, you start to have a certain level of comfort. There's a certain level of comfortability that attaches itself to a consolidative state of a market, right? So if that's the case, we need something that's going to provide a bit of a accelerations towards the decision making of traders. We need something that's going to wake them up. We need something catastrophic to kind of like occur within the market, therefore causing chaos in order for traders to react, right, rather than being proactive. So we've got, remember that traders, they get, how can I put it? Traders, in most cases, they get seduced into taking position based on the color of the candlesticks. Those that use similar colors on all candlesticks, they basically get seduced by the closing price and the opening price of a certain candlesticks, regardless of each and every time, regardless of the time frame, right? So if that's the case, right now, do you feel like traders that are taking long positions are in a state of comfort? Yes or no? Do you feel like traders that are taking long positions at this particular time are in a state of comfort? Yes or no? For now, it's a yes, right? The reason why we're saying that the traders are currently in a state of comfort is because, like, each and every time the market breaks below a certain low, the break below at that specific low is not significant enough to make one give up. It's not significant enough to make one give up. You see here, the distance between the swing lows is not that significant to make one give up. So they still have hopes in seeing the market pushing to the upside. They still have that belief that, yeah, you know what, this market is going to push up. This market is going to push up. No, it has been selling, you understand? So they are now put into a situation where they have to convince themselves that they are right. But they do not understand that in each and every scenario that's presented within the market, there is always an underlying factor. There's always a hidden agenda. Always look at it from that perspective. Always look at it in terms of like, if the market does consolidate, remember last time when we spoke about if a consolidation does form around a key significant area that can be viewed to be an area of significance for retail traders, that specific consolidation will be the death of their positions. It will be the death of their career. In most cases, those that have over leveraged on their positions, right? So right now, look at this specific area. This is an area of interest, isn't it? Regardless of whether you put it here, at the end of the day, all these things, they're all the same, right? So you telling me that like you're going to give me a significant consolidation around a specific area, and then I should believe that the market has all the intention of reversing in trend. I want us to be on that tip. Like, I want you guys to tell me. I want you guys to tell me. Right? It's like this thing, when you view this type of things, when you view this type of consolidation around a key specific or a specific area, ask yourself, or like, put yourself in a real life scenario. So if you go into a loan shark, or what I don't know what they call them, but someone who borrows you money. The person borrows you money and he knows very well that you can't pay up. Like some of them, they do know that you can't pay up, right? Do you think that if you are in a position where you can't pay him back, you'll just say, okay, sharp. No, you can't pay me. Don't worry about it. Obviously, some bones will be broken, right? So similar thing. So if they are showing you signs or like, you know what, come enter, take your positions, take your long positions. Now, I'm not going to hurt you. I'm not going to hurt you. Like, you know, me, I care about you as a trader. I want to see you succeeding, right? So do you think that they're going to give you each and every opportunity for you to be in a position to profit from the market? They're not going to do that. It's highly unlikely that they're going to. Even if they do, they might give you bait because they will give you something that's going to give you a surety, such as a what? A demand zone. This is something that can be something of interest. So now you're looking at this, you say, oh, okay, but they went up 1 week. Second week, they went up, therefore resulting in the formation of a demand zone. So it's a weekly demand zone. So I should be in a position to start considering taking long positions because they knew or they know very well that at this particular point, you won't be in a position to enter long positions with confidence. So they need to give you something that can validate you, something that can give you more confidence in terms of you taking long positions. So now when they come back and give you a retest of the supply zone or the demand zone, what do? You start going in hard. Because now they have given you something that can give you assurance. They have given you confidence. Are we okay? So now with this confidence, this new confidence that's newly found, right? So they're going to push price to the upside, always enticing you into coming in and placing those long positions that they want, right? So the more long positions that have been placed within the market, remember in the very same sense, you have people that are yet in the very same positions, they are liquidating their open short positions because when the market starts retracing, those that have short positions located around this area here, they are now rethinking their positions and say, you know what? I feel like this market is going to reverse and continue rallying, right? So if it's going to reverse and continue rallying, if I maintain these positions, I'm going to lose all the profit that I have made with the short positions. So what am I going to do? Liquidate positions. So the forced liquidation process occurs based on whether people have over leveraged, one, or they are losing profits, or they are in a drawdown. Some people just choose to cut their losses very early, right? So right now, when we're looking at this, we should be viewing this in the form of this is a trap. right? Similar situation has occurred previously here, isn't it? So multiple opportunities to take long position, to take short positions were presented, but the push to the upside made sure that everyone that's located here is no longer there. So this is what we will regard as the filtration process. This is the process that gets most of the traders out of their positions. Am I making sense? Are we okay? Are we okay? Okay, so if that's the case, we do realize that the very same thing that has occurred here has the likelihood of occurring here. Therefore, what's the way forward? Can someone tell me what's the way forward? Because we do see that like there are probabilities that the very same thing that has occurred on the left-hand side might occur on the right-hand side. What's that rule, mathematic rule? Which rule of mathematics is it? The one that says that the what on the left-hand side must be what on the right-hand side. I forgot the name of that equation. Guys, remember your high school training, guys. Guys, remember your x is equals to x. The left-hand side must be equals to the right-hand side. I think that's a. But yeah, mathematics. I think I did these things, guys. I did these things. I'm a man of literature. Man of I'm joking, guys. But like, yeah, but like those are the very same things that can occur within the market, right? So what you are seeing on the left, that's algebra, but it's not linear algebra. I forgot which one is it. I think is it? I don't remember very well. What you do on the left-hand side must also be done on the right-hand side. Yes. So right now, this is what we can see. We can actually end up seeing the GBP AUD kind of like consolidating for a very lengthy time, hey? For a very lengthy time, we can end up seeing that consolidation kind of like just occurring, right? So those are the things that you have to take into consideration, provided that right now we're still trading within a consolidation. And one of the things about a consolidative state, and one of the things about a bullish channel or you understand, bullish channel, those type of things, those type of consolidation, they actually have no duration in terms of how long they will last, right? You understand? There is no specific duration. There is no specific duration saying that like, okay, this market is going to consolidate for 3 months. This market is going to consolidate for 2 weeks. There is no specification. But the one thing that is clear about the consolidative states is that whenever the market breaks out of that specific consolidative state, the trend is very strong. Are we okay? So that means